All right, so pretty much back to the lows of this range right here. Bitcoin has not swept this level yet at about $81,000, and it's especially interesting because the S&P 500 did. The S&P 500 managed to set a low right here at about 5,500. It moved all the way up to 5780 for basically a bull trap, and now it's actually swept that low. So Bitcoin's actually doing a lot better than traditional finance from this particular narrow perspective, and we can't draw massive conclusions off this, but it is a good sign, and we'll dive into why that is later on in this video. Now, if you are excited for it, do me a favor and smash those likes up. As usual, double check that you're subscribed, and you've got some phenomenal access to offers in the description below, where Bybit is going to give you up to $30,000 in completely free trading capital that you can throw back into the market, and any profits you generate are going to be yours to keep. Same with Blowfin, so check them out if you're not from a restricted region. Blowfin doesn't go up to 30k, but they have much more aggressive bonuses for lower deposit amounts and stuff like that. So really, really cool stuff there if you are allowed to by your country's local laws and regulations. But over on Bitcoin right here, for me, the reason that this is, particularly interesting at this stage is, we've seen Bitcoin really matching a lot of the weakness from traditional finance for a while, right? And I can show that to you very, very clearly, just very quickly here, where, we've got this beautiful pink line here showing us the S&P 500. And, just take note of kind of when some of the dumps intensify, stuff like that. If I go ahead and draw a couple of vertical lines on this chart for you, here is one of the peaks for the S&P 500. Here's one of the lows for the S&P 500. Here's one of the peaks. You're not getting a perfect one-to-one match here. There is oftentimes, a little bit of a delay on one side or the other. But one thing that's undeniably clear is we're getting, just the same general, quite clear trend in this market. And I think that's actually quite useful because right now, I mean, the fact that the S&P set a brand new low and Bitcoin hasn't, I think that's actually kind of a big deal. Now, I do think that Bitcoin can follow. And like I said, we'll talk about all of this in a little bit because I don't want to focus too much on this at the very, very beginning of this video. But what we do have here on this chart, ladies and gents, is still a very, very interesting chart setup because Bitcoin hasn't dropped this low. And just because of that alone, from a purely technical basis, we're not actually in a particularly bad place right now. In fact, we're actually at a buy level, and the market seems to be responding to that because, you could just take a look at how our trading has happened at this range. We've, consistently been able to produce some pretty good, kind of bounces off this level. Now, we did kind of overshoot it on these occasions here, but, pretty much other than that, let's just count this real quick. That's 1, 2, 3, 4, 5. I'm counting these. They were slight overshots, but, not, by like 1.2, right? It's not really a big deal, 1.2%. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, and this would be number 10. So, one of the things that I think is actually very important to take note of as well is that this is a 35-day range that we've spent kind of dealing with this support level. So it's been going on for a little bit. That definitely makes it valid. You could argue that it makes it a little bit weaker. So far, man, like, you can be emotional about it. You can be screaming about Trump's tariffs and stuff like that. You know that that's not what we do on this YouTube channel. Obviously, we're interested in kind of staying much more grounded, right? And if that's what you like, then obviously you're in the right place. But what I think, is showing on this chart is basically just, you're basically getting a little bit of a kind of resistance zone looking like that. I can go ahead and take this green line off. We're not so concerned about these levels a little bit higher up, so I'm going to remove those boxes as well. This is kind of what we're working with right now, and I think that's actually pretty obvious, right? I think you can tell pretty clearly that this is what we're dealing with right now in this market. And, basically, as long as this low, has not been lost, we're still kind of sideways. And we're sideways inside of a bearish kind of structure, but it is a structure, and I don't think people are really thinking of it that way. Obviously, we had this one up here. I just removed the boxes for it. But, we had this one up here with this structure looking a little bit kind of like this, right? And this is kind of what we've been working with for, the last months before, before we entered this range. So it's just, it's two boxes basically, and until we break them, we haven't broke them. And I think, this is where market participants really get it wrong. Sentiment wise, it's really quite overwhelmingly negative, and it's hard to escape it. Even all the smart people that you're watching are kind of saying the same thing. For me, it's just about kind of looking at, is there a mismatch between how people feel and the words that people are saying versus what the chart is showing me? Or in other words, if I didn't listen to you, your friends, if we weren't in the same, group chats, if we weren't looking at the same things on Twitter, whatever the case may be, right? If those things were not happening and all you had was this chart in front of you right here, if that's all you had right here, would you still feel the same way that you feel right now? And I think that's a much harder, question to answer, honestly. To answer it in an honest way, I think it's actually quite difficult. But overall, we're not actually looking that bad, right? I mean, this is essentially, I just want to put this in perspective because my goodness, we need some perspective right now in this market, ladies and gents. It's just all going a little bit haywire. And I'll be honest, man, it's made me less interested in making videos because, when you're right so often, but everybody hates you for it the whole time, it's just exhausting, dude. Like, I don't need to do it. So that's kind of, it's not actually the hate that's an issue because thankfully I don't get very much of that. But I don't know, it almost just doesn't feel worth doing. But the good news is that while I am still here, this makes me so much more honest. Not that we had an issue there at all. But you're going to be seeing even more of my, I don't know. I think for me, a big thing of the way that this channel's going to move is especially for me, the way I kind of, present on this channel. By the way, if you want to present on this channel, reach out. But for me, it's about actually just talking to you like I'd talk to, a friend that I'm very close to, in that I wouldn't really be worried about you being an idiot because many people who watch these videos are, not all, very, very few compared to the, in terms of broad percent, but many are. And I don't want to talk to them anymore. They're too stupid. I can't keep up. And so, with that in mind, if we look at this from the low to where we are right now, it was a 600% move up. Okay, it was a 600% move up, and down to our current price, we're down by about 24%. From that all-time high, we've basically been trending down for about 2.5 months. From the low to the all-time high, we've been trending up for 800 days, which is over 2 years, if I'm not mistaken, or somewhere around there. So definitely quite some time that we've been trending up. Pullbacks, we're okay with them. This pullback, let's just measure this one real quick. This was also, roughly about the same kind of percentage drop. It was about a 21% drop, but it only lasted about 2 weeks. So 2 weeks compared to 2.5 months. We're definitely doing something longer than this, but we're definitely nowhere near, the kind of consolidation or, continuation event that this was of, 240 days. And obviously this was very, very similar in terms of length, in terms of, it was 215 days. So basically 7 months and 8 months respectively, more or less. Very, very long times to be kind of, and it also, they also happen after, quite large percentage moves. I mean, from this low to the high, that was a 90% move, right? From this low to this high, that was a 60% move, right? So you can kind of understand why the market needs to cool off a little bit. From this low to this high, it was 120. I mean, I don't think we're actually maintaining perspective of what's actually happened here, and that's I think why all of the quite extreme sentiment to me just sounds so silly. I just can't entertain it. To me, it doesn't go in. And I've been doing this for over 8 years. By the way, I should note many of the people who have been doing this for as long as I've been doing this are super calm about this. Yeah, we're super calm about this. We're not worried about this. We've seen this a million times. If we've just acknowledged that Bitcoin can go up by 90% and that triggers an 8-month correction, or Bitcoin can go up by 60% and that triggers a 7-month correction, because that's what we just saw. Rewind the video if you missed it or if it didn't fully go in. Just rewind by a couple of minutes. If you understand that, then you must understand that 124% is a big deal, right? It doesn't mean that we automatically need to have big corrections or that they need to drop the price down by much or that they need to go sideways for a long time. It doesn't mean any of that, okay? We're not talking in absolutes. But is it unreasonable? Is it unreasonable? This is the key word. Is it unreasonable for this to be happening, right? Given everything that's happened so far in this market cycle. I don't think so. I think that's actually a really, really very clear kind of thing to look at, and I don't think it's unreasonable at all. Now, if we zoom in a little bit, sorry, just to round off this thought, because I'm going to forget, that means we can come a lot lower. Okay, I've made this case many times. I'm making it again right now. 40% from the all-time high puts us at 65K flat, which is a really, really nice level for Bitcoin to get down to. I mean, I would strongly, strongly, strongly believe that Bitcoin can find support in that range, anywhere between $60,000 and $70,000. I tolerate anything as low as $49,000 because that 49K more specifically, because that was the low that Bitcoin punched in way back in August of last year. So, anything higher than this is still technically a higher high. And I mean, like I said, you can be scared about it, you can bitch about it, you can scream about it, but market structure is there, and market structure won't change until Bitcoin gets below 49K, right? So that's really, really good news. That's really, really good news for us to be able to keep in mind in this market. And then, I think if let's just go ahead and throw a fib on this as well. I haven't actually done this maybe ever, I don't know, but not for this kind of entire market cycle. I don't think I've done it so far. Maybe I have. But our 382 level sits very pretty right at Bitcoin's previous all-time. I mean, the number, the story's right in itself, don't you think? I mean, if you've been watching me for a little bit, you're going to understand that this stuff just makes sense. This stuff happens this way. To me, the numbers just, they just really, really line up, right? I mean, you got the previous all-time high that actually triggered that entire 8-month correction. Coming in right at the 382 Fibonacci level. I mean, it's a little bit too perfect to be just a coincidence. Maybe it is. Maybe just Fibonacci numbers are that powerful. Honestly, it probably could just be that simple, I think. But great level down there. And it's really nothing to be concerned about, right? That's a better $9,000 drop, no big deal. Down to a really nice support level. You can barely even see the difference on the J. If it happened, it wouldn't even be that bad. And then obviously we've got our beautiful golden pocket over here, and this is kind of right in the middle of where that low was. So to me, this chart still looks really healthy, ladies and gents. It just does. And I'm saying this very, very crucially, if I'm ignoring all of the words people are saying, all of the narratives people are spinning, all of the news, all of the tariffs, all of the Trump stuff, if I'm ignoring all of that and I'm just looking at this chart, then this looks pretty healthy to me. Now, whether or not you think that that's a good idea, right? Whether or not you think it's sensible to ignore all of those kind of real-world fundamental pieces of information in favor of just looking at technicals, that's a much more personal discussion. What I will say is that fundamentals over the last 50 years have become so much less important than technicals because technicals represent market psychology, and ultimately market psychology is the only thing that moves these markets, okay? If fundamentals moved these markets, then the Bitcoin halving would have been the day that Bitcoin set a brand new all-time high, right? Or the strategic Bitcoin reserve announcement, for example, would have been the day that Bitcoin reached a new all-time high. But none of these things happened, okay? Because it's all market psychology. Market psychology tells you that things get priced in. Market psychology tells you the strength that you're moving down or up with, and it tells you how high you can get. Look, all of it's probability based. You're never going to get it perfect. That would be, unrealistic. But you can get good. You can get a really good idea. You've seen that on this channel throughout, the last 8 years that we've been producing content on this channel about crypto. You've seen that consistency play out in front of you. So to me, I'm definitely in the camp of technicals being more important than fundamentals, especially, as it has been with Trump, where there's been so much back and forth, so much changing of minds, so much, changing of positions. Today there's a tariff, tomorrow there isn't. Today there's a tariff, tomorrow there isn't. Just so much stuff like that. To me, in that kind of environment, the only thing I can see with stability is the technical chart, okay? So unless I'm a Trump insider in the White House or a Mar-a-Lago or whatever it may be, this is the best I've got, okay? And I don't think that I'm at a significant disadvantage after having been in this position many, many times throughout my time being a trader, where the technical chart tells me one thing and everybody's words and feelings and excitement and fear tells me another. I've chosen the chart most of the time in those situations, and it's paid very well most of those times. So I feel pretty happy about this chart. I mean, 25% down from the high. We haven't even hit the 382 Fibonacci yet. Let's go ahead and look at it from here. I mean, look at this. So we did hit the Fibonacci here, right? The 382 level. So that's pretty interesting. Let's draw it up to this high. We did not hit the 382. Draw it up to this high. We did hit the 382. So this means that, actually during every single major correction event for Bitcoin in this cycle, Bitcoin has hit a 382 Fibonacci during every single major one. So far, there's only been 2 major ones that have fully played out. The first one's right here. Bitcoin fell down to this 382 level at 25.5. And then over here, Bitcoin fell down to this 382 level at 51.75. And then right now, 382 level is at the previous all-time high. So again, you can be emotional about it, you can be upset about it, or you can be a subscriber of this YouTube channel, and none of these things are going to really upset you. If you're interested in getting into the most powerful one-to-one package that we've got, you can reach out with this link in the description down below. We've had phenomenal success with this package. It is expensive. It is very serious. It's a 12-week program, but nobody that's ever taken it has failed to massively pay off that fee, either through usually both through saving in terms of losses that didn't need to happen that get prevented, and then also through aggression, through making profits that maybe wouldn't have been so easy to access. So really a very, very powerful thing there. If you want to check it out, then obviously you've got that link down there in the description, and great opportunities on these exchanges too. It's just free money, right? I mean, if you don't use them, then you're behind compared to the guy that is, because he's getting thousands of dollars for free in his trading account, which you've had to take out of your salary to do. So just makes sense. Check it out if you are not from a restricted region. And then back to the video. We've got, so that beautiful 382 retracement there. Now let's zoom in a little bit. That was a really, really long time spent on kind of the first main point of the video, but that's okay. I think it was actually maybe the most important point. The daily chart right here, if we zoom in a little bit, is obviously looking weak. It's certainly looking like, we kind of had the, ascending parallel channel, didn't quite work out, and now we're collapsing below. So, it certainly looks like it could sweep that low. And that's the thing I was saying about the S&P 500, right? Is that, the S&P 500 did sweep that low, but, it's Bitcoin didn't. And so maybe it's a sign of strength. The catch is obviously, Bitcoin might just be lagging by a day or two. That's definitely happened before. It could be lagging by more than that. It's really not the point. The point is kind of overall macro trend. So, just based on that alone, I don't want to kind of judge it and start saying that, oh, look, Bitcoin's got a lot of strength that the S&P doesn't. But as it stands today, that statement is true. So, my point ultimately is that if it stays the same, then that's really something you got to look at, right? Like if it stays the case over the next days, over the next weeks, that the S&P moves up and Bitcoin, that the S&P moves down and Bitcoin holds its ground. Maybe it moves down by not as aggressively. Maybe it doesn't lose certain levels, but the S&P 500 does lose its comparative levels. If that happens for a while, then we've got something really big on our hands. We've got decoupling. It's kind of a big deal. It's like the best thing that could happen in this market. But until and unless that happens, we don't have it. And we just have the same kind of broader correlation that's existed for many years now with Bitcoin and the S&P 500. And I wouldn't really kind of be in the business of saying that that's going to, kind of cease to be a factor on the market. So I still think that if the S&P is getting dragged down, Bitcoin's going to follow. There's still a little bit of time left. It closes in about an hour today, but not a good look right now the day after, so-called Liberation Day for the United States. Now, like I said, I don't want to talk too much about politics, but I also keep telling you that I don't really have a choice. Look, my take on this is quite straightforward. Kind of the worst event of the tariffs has now happened. Could it get worse? Yes, of course, but would it? I don't really think so. We're obviously already seeing a lot of countries kind of rolling back some of their tariffs or easing off. I still want to point out, and I'm by no means a Trump stan. I don't love him. I don't hate him either. I just see him for what he is, another politician, businessman turned politician, but behaves like a politician nonetheless. Very nepotism, a lot of nepotism going on over there. Still corruption going on. We're not surprised by what we see, but he does do good stuff for the economy. He did great stuff for the economy last time. Biden, obviously, that was just a function of inflation and really artificial stuff. But, I think Trump genuinely did have a better effect than at least any president that, has kind of walked in during my lifetime. And so, I think that makes sense. And this is my point with the tariffs thing, right? Is, I don't see this I don't see this kind of worsening to the point where it becomes something really, really very nasty, because it hasn't. First of all, it's down, the S&P 500 is down by 12% now. That's down to the most recent low, the lowest low so far. It's down by 12%. It's really not, it's really not a sizable drop by any means. We can measure this one right here. This was a 10% drop and it took 87 days. This is a 12% drop and it's taken 43 days. So, it's not even the slowest, move down we've seen. And, in my opinion, and many of you will probably agree, a slower correction is more painful than a faster correction. Because it's your life that it's taken away from you. It's kind of, it sucks. It sucks having, a market, really take its time with corrections. So we're just not in a particularly bad situation, despite what everybody's telling you, despite what you're seeing. If we were, then you'd equally have to paint a lot of other events with the same brush, and you don't, because you have double standards, because you believe the media's lies and narratives. If you do, if you don't, then brilliant, good stuff. Honestly, it's not easy to, see through this bullshit. You really just have to. It's less is more. You really just need less. You need to hang out with less people, talk to less people, consume less shit. You'll probably just be more rational, because everybody's a fucking idiot. Everybody is a fucking idiot. And if you're listening to them, you're just setting yourself up for failure. But, 12% down here, like I said, I'm no Trump, fan or whatever, but, I do think that, the tariff stuff is more or less done. I do also want to point out, on those lines of me not being a Trump fan, but also not a Trump, hater, as in my identity is wrapped around those two ideas. The tariffs are, number one, they're reciprocal. I don't know why people miss this, and I feel like I just need to keep on saying it to do, my part on, just reminding people what the facts look like. I did say I won't do this at the beginning of the video. I did say that. I did say I'm going to stop talking to the idiots. But a lot of smart people get this wrong too. So, this is just me being nice now. But reciprocal means, if somebody did it to you, you're doing it back to them. So eye for an eye, I guess, but more economic. And even at that, they're discounted, okay? So most of the time, and I've seen the data on this, it's published, it's easy to access, maybe we can pull it up in this video, but most of the time, what we're seeing with these tariffs, ladies and gents, let's see if I can pull it up real quick, is that, where one country charges, let's say, 50% tariffs, the United States, in response, will only be charging 25%, and this is across the board. This is quite a, consistent thing that we've been seeing. I just want to see if I can pull this up real quick. Make sure that I am, let me just zoom this page in properly, because this looks a little bit too zoomed out. And here we go. Take a look at this right here. This is Liberation Day reciprocal tariffs from the White House themselves. Look at that, 17 million views on this tweet right here. And, look, so we got the UK right here with 10%, United States charging 10% back, but we got South Africa here with 6, the United States charging 30 back. We got China with 67, United States charging 34. That's less than half, or more than half. I don't know. I'm bad at math, but it's around half. There's a lot of consistency here. Look, New Zealand 20%, and then United States charging them 10. So, I'm really puzzled as to why this is so demonized. I mean, we all see the same data, right? A lot of people saw this. A lot of people that are still talking shit about the tariffs, they saw this. And Bangladesh, 74%, 37 from the United States. I mean, it's really fucking generous, It's really, to me, I don't know, correct me if I'm wrong, but the only argument I can think about if, this is not going to stick around, I'm sorry, the only argument that I can think about if this is a bad thing, is that the United States should give charity to other countries in the form of trade subsidies by comparison of what the other countries are doing to the US. Or in other words, that this is bad because the United States is not being nicer to other countries than they are to the United States. And look, you can have all sorts of virtuous discussions about the oppressor should pay or whatever, but if you take that far enough, you start getting to reparations, and it just starts getting quite silly. So realistically, this just looks reasonable to me. It looks like a lot of countries will suffer, but the United States will not be one of them. if this goes to plan. I actually tweeted about exactly this, and I said earlier today that at this stage, with this much economic pain, the tariffs are either the absolute best thing for the USA in decades or a very, very serious mistake. I'm still leaning optimistic. Primarily, this is the most important thing. We're going to get to this right now. Primarily because markets were due a correction already, and this is just the excuse to justify. Okay, so the next thing that you're going to know if you've been around for a long time on this YouTube channel is, there's this beautiful quote, and it goes something like, "Show me the chart and I'll tell you the news," right there. And who is it from? Who is this lovely gentleman right here? Is it Bernard? I can't say that last name. I'm not going to try, but I'm going to try. Is it Baruch or Baruch? Baruch? I'm not sure, but show me the charts and I'll tell you the news. Have an opinion on what the market should do, but don't decide what the market will do. Be happy with a percentage of them. This is really, really good stuff right here. Really, really good quote. But, obviously this is the main one right here. Show me the chart and I'll tell you the news. Basically showing you that, and it makes total sense if you really think about it. When you're looking at, the market, historically, you can't see the news, because, you would have to look back at like, okay, well, what happened, to trigger this drop on the 1st of April, 2024. And, that's going to get quite long-winded. You don't do that realistically when you're looking at a chart. And truthfully, you don't need to. I think one thing that's actually kind of funny, and I want you to deep this with me for a second, is when you do historical analysis, you will never once question what happened here. Was this the halving? Was this, a Trump tariff? Was this a Biden thing? You just won't. You'll just look at the chart. You'll see that there was a high. You'll put a fucking moving average on it. You'll look at the RSI. You know what I mean? Like, you're gonna look at it from a more technical perspective. But then when it comes to the present day, which tomorrow will become history, when it comes to the present day, you'll pay attention to all the news narratives that you didn't care about in your historic analysis. You'll pay attention to, you'll pay attention to all of the fear narratives. You'll pay attention to what your dickhead idiot friends say in your WhatsApp group. You'll pay attention to all of that stuff in the present day. But when you look back at the chart historically, you'll be looking at something purely from a technical lens, and you'll have a much more sober perspective of it. And I think you can answer the question very, very well, which way is better? Should you do it one way historically and one way in the present, or should you do it the same way every single time because the technical way is the one that works best historically, and understanding that today will become history tomorrow, maybe you should be operating with the same kind of ideas. I don't know. I think it's pretty obvious for me. In other words, what I'm saying is take your emotions out of it. Take them out of it, ladies and gents. We don't need it. We don't need it. So that's, I think that's a couple of the really, really big things there. Here's Bitcoin dominance. It swept that high exactly as predicted on this YouTube channel. What a brilliant YouTube channel, by the way, man. You just can't get better analysis on these markets than what you find right here. We're just so correct so often. Beautiful, risen up above that high right there. This one didn't actually hit Ethereum too much. It did, but Ethereum's actually still holding kind of steady. It looks like it's the other coins that have suffered today. So here's Solana against Bitcoin. This is a much worse chart. This is not good. It's broken a key level. It's got support right here. If it can't find support right here, it's in deep trouble. And we're probably going to be seeing this kind of broadly across the altcoin market, not right here on Binance, but it definitely happened on XRP today. XRP has fallen out of its ascending triangle here, which is not good. You do want to see it holding levels like this, but it hasn't. Along the same lines, XRP against the dollar, it is now down at support. It is getting weaker bounces every time. I want to, kind of highlight this to you pretty clearly. If we look at, this bounce, because I'm going to be a little bit biased here, this was a 70% move. This bounce right here was a 60% move, and now I can't see anything. This bounce right here was a 53% move. This bounce right here, 35% move. So we're clearly getting weaker as we bounce off this support level. And that is an indication that XRP might be ready to kind of lose its ground over here. Now, does that mean it's also the best time to buy? No, I don't think so. Typically, if you're looking for strength, you want that strength to play out quickly. The fact that it didn't play out quickly here, even after it had honestly a very, very beautiful kind of descending channel that, really led it into a breakout, because it didn't really materialize, it is looking like a weaker chart now. It's not a chart that I would bet against just yet. I still think that, it definitely means something. The fact that, this is quite literally, as far as I can remember, the first time XRP has ever done this in history, meaning that it pumped up to all-time highs and then just stabilized. That's never really happened. Yeah, going all the way back to 2014 right here. I don't know if this is all of the price action, but it just doesn't really do this. So that's really, really bullish. Really, really bullish still. And this is the macro, and I think this is again what I started the video off with. It's become a really long video, but every single minute here, people tell me make these videos. I can't. Dude, you've got money in these markets, and you're trying to get bite-sized clips, and go fuck off to someone else's channel, dude. You're not gonna get it here. I've got money in these markets. I'm very, very serious about my money. Just like you made it 30 minutes into this video. I'm very, very serious about my money, so you better believe I'm looking at this from every single perspective thoroughly, and I'm not rushing myself, all right? I'm not rushing myself because I got money in these markets. I'm serious about what I'm doing here. Why the hell would I rush? This is what I do. This is the main thing I do. Why the hell would I rush myself? I'm going to do it properly. Oh, my God. I'm going to do it properly, ladies and gents. That's just how it's going to be. So, still a good level for XRP. And, like I was saying toward the beginning of the video, it's about, this macro trend, that I think is actually very important. When you look at the kind of macro situation in the market and understand that it's looking really good. Yeah, you still got to look at the short-term perspectives, but if every time the short-term changes, if you start thinking that the long-term is also changing, that's just naive, right? That's just, now you're just getting swept away in the kind of emotional waves of the market, and that's not going to do anybody any good. It's not going to do you or your family any good. It'll do the market quite well because, then people like me can come in and make profits, but I'm trying to help you guys out here. So that's important. So XRP right there, yeah, I think that low is important right there. So like I said, though, other altcoins, they are going to be suffering against Bitcoin today because, well, not just today, but just over the last few days, because we have seen Bitcoin's dominance move up by a little bit. So that's going to be something that we will continue to take a look at. Solana against the dollar, since we did look at it against Bitcoin, is now down to 115. This is a support level for Solana. It's also the low that it punched in about a month ago. Not too much I can say here, but it's in the same position as the Bitcoin chart. If it loses this level, it could be in trouble. For me, though, the lowest level that I'm actually kind of concerned about for Solana would be 84. I can tolerate Solana going down to 84, and I'm still not particularly worried. It wouldn't be great, but it's not going to be what really, really scares me. I think getting below 84, that now you've really got a pit of darkness. There's really no way you can go. You got a guaranteed, next, 40% drop down to $50. More or less guaranteed. Nothing is guaranteed, but there's basically no trading that's ever happened in this range, so it's probably going to fall like a rock. And then obviously, it could actually drop a fair bit lower than that until it really stabilizes down to $30. So it's still far away to get to 80. This is just the nature of these charts, right? I get this will also be frustrating. The whole fucking market's frustrating. Welcome to the game, dude. When people find my analysis sometimes a little bit frustrating because I'm giving really big ranges, it's you picked crypto, okay? If you don't like it, go to Forex, okay? Go trade some gold, go trade something else. Don't do crypto, okay? Crypto is a market where levels are very, very wide. And if you can't tolerate that, then you'll take yourself out prematurely, and then you'll watch someone else making money, and you won't be able to stay on that ride. Again, 8 years in the game. I think I'd have some idea of what I'm talking about here. Really, really important stuff. Really, really important stuff there. So, yeah, the ranges are big. It is what it is. If you don't like it, then leave. If you do like it, then maybe you get to make some money off it. And if you're neutral to it, then even better. Maybe you get to make some money off it. That's kind of my take on subjects like these. So here's Cardano as well. Yeah, nothing of note to talk about over there. And now zooming into Bitcoin just one more time to give you my thoughts on what Bitcoin will do pretty much at the end of this video. Thank you guys for tuning in for this log. I really do appreciate it. Like I said, some phenomenal offers with these links in the description, and that highly successful program down there. If you are interested, just reach out while you're watching the video, and a member of the team will get back to you. But yeah, right here, this sideways range, if we lose this level, we're probably sweeping the low, coming back down to our beautiful areas where we should be able to find some better support. And on the other side, if we kind of break this resistance at about 87, which I don't really see how that's going to happen right now without something from Trump, but if it does happen, then, we're pretty much looking back at this 90K range. We got to break this one too. At this stage, if we do break 87, especially because we've, now really validated it as an important level in the market, let's kind of look at this on the 4-hour, by the way. Like, this is, clearly a level where some shit has been happening for a while. That's going to make it a significant deal, in my opinion, if Bitcoin can get above 87. And that is going to make the resistance at 91 a little bit weaker, because if you can get through a resistance level like this, you're probably carrying some momentum for the next one. Okay, so that's typically how these things work as well, in my experience. So there you go, ladies and gents. Great video. This is actually one of my favorite videos I've made in a while. I hope that you guys enjoyed it too. If you have, you know what to do. Hit up the like, subscribe, tick the bell, do all that good stuff. And I will see you all in the next one. Cheers.